A lot of people worry about the US dollar falling or losing reserve currency status. They think the S&P 500 will collapse, markets will crash, and everyone holding US assets is finished. But the data, the history, and basic math tell a very different story. Let me break it down. First, the S&P 500 isn't the US dollar, it's 500 global companies. Look at Apple, Microsoft, Coca-Cola. These companies earn 40 to 70% of their revenue overseas when the US dollar weakens. Foreign revenue converts into more dollars equals higher earnings equals stronger stock prices. That's why US companies don't die when the dollar falls. They often get a boost. And this isn't theory. It's happened before, multiple times. 1985 to 1988, the US dollar fell 40%. The S&P 500 went up 60%. 2002 to 2007, the dollar dropped 35%. The S&P climbed 80%. A weaker dollar has historically helped US stocks. Not hurt them, by the way. If you like calm, data-backed investing content like this, hit subscribe. I'm 44. Just documenting my journey and learning along the way. Now, what if the US actually lost reserve status one day? People imagine chaos. But here's the economic reality. It would force the US to print more money, and when a currency weakens, real assets inflate. Weak money, strong assets, stocks, gold, real estate, even Bitcoin historically rise when currencies lose purchasing power. So losing reserve status might hurt the US dollar, but it doesn't destroy the stock market. Now, what about people like us in Singapore holding US assets in a different currency? Yes, a weaker US dollar affects FX conversion. But historically, asset growth beats currency drops by a wide margin. The S&P 500 rises faster than the USD falls. That's why long-term investors still come out ahead. And that's why I hold a mix global ETFs like VOO, VTWO, VXUS, QQQM, gold through GLDM, Bitcoin and crypto through IBIT and ETHA, and strong local stocks like DBS. That mix naturally hedges US dollar strength. US dollar weakness, inflation, and reserve currency shifts. So here's the simple truth. If the dollar stays strong, US stocks do well. If the dollar weakens, US stocks, gold and crypto rise. And if the global money system changes, real assets, not cash. Hold value. That's why I don't panic about the US dollar. History, earnings, and math all point in the same direction. Hold real assets, stay diversified, and focus on the long game. The Midlife Investor, copy, clarity, and calm investing.